Okay. So what I'm looking for on this M right here, I'm looking for a liquidity graph, meaning that every time it goes up, it's grabbing liquidity. Like right here, it's grabbing liquidity. These are all liquidity graphs right here. So it starts off right here. It goes in to a bullish trend, which you could have got this too. Because remember, anytime it touches like this with the long wick, it's pulling liquidity. But I'm always trying to look for the biggest grab. Like this was a big grab right here. Okay, so what happened was smart money came, pulled liquidity right here. This is in the market. This is where a lot of the stop losses and everybody will be. All the retail traders will have their not the stop losses, their pre-orders will be right here. And so what happens is smart money comes, knocks everybody out, takes all that money, and runs to the bank. This is a run to the bank right here. The trend is running to the bank. They're making all that money right here. You trade. Let me write this down. Where's the text? You trade. No. If you trade the way institutions trade, you'll make bank money or institutional money, I should say. You'll make institutional money. Okay. So I always try to trade like the banks trade.
But you're your own bank, right? You don't become your own bank, correct?
Well, yeah, well, that's something different. Yeah, but I'm talking about whenever I'm in the market, because we're retail traders. Remember, we're not institutional traders. We don't move markets. We don't push the market. We help push the market when we're in the market because we're putting our money in and things like that. But the big boys, like the Goldman Sachs, the Charles Schwabs, you know what I mean? Or you can go to the major titans of the world, like the Elon Musk with Tesla and all them. They move markets. You know what I mean? So because they put so much money into the market, and that helps them push the market. So those are institutional moves. So if you find out where the institutional moves come in, and when institutions come in to take that move, you'll make that money. Okay, it's really that simple. So what happens is a little grab right here. It's a big move. I seen that. Okay, now it went to the resistance line. We got support and resistance. I'm really going over this for Manny, but you got support line, which is right here, and resistance. That's where you see these. This is called a swing. Swing low, swing high, swing low.
Oh yeah, this is good. This is good.
Are you understanding, Manny?
Yeah.
Okay.
Yeah, I'm learning. I'm watching.
Okay, cool. So you got swing low, swing high. So pretty much this is a small little institutional grab, and they go right here. But it's not a big move. It's not a huge move because the highest high is up here. So you got your higher high and you got your higher low. Actually, the highest high is back here, back then. But this is New York. So now this is Asian right here. This is all Asian right here. Okay. So New York ended around right here. And then New York took, I'm sorry, then Asian took over. Then London takes over after that. So now what happens is right here, I saw another grab, but I was like, you know what? It's not a big enough move. Now I could have made money right here, and I'm teaching you guys to do this on these little moves. Make the money if you can get it, because what happens is I want you guys to make $200 to $500 a day. So when Manny was talking about his guy making 500 to 1,000 a day, that's big money. Okay, because think about it. If you just do the math, let's see. Watch this. I'm gonna go watch this. I've done this a few times, but I'm doing it again because Manny's on. So you do just say $500 a day. All right, $500 a day times 22 trading days. Because you can't count weekends and holidays unless you're trading crypto. Okay. 22 trading days. That equals, hold on. There we go. That equals, this is what some losses in there. Okay. Some losses, you know, on some days or whatever. You can make anywhere between 8,500 to 11K monthly. That's making $500 a day. That's if you're just making $500 a day. No, some days you're gonna make more. Some days you're gonna get 1,500. Sometimes you're gonna make 2,000. Some days you might make 300. But if you just take $500 a day, this is your monthly income. This is why trading is the #1 money maker in the world. That.
Do you have to have an investment for this?
You do have to invest a little bit, but you don't have to, like, for this to do this. We trade what we're doing now, mainly prop firms.
Okay.
Yeah, because most traders are undercapitalized.
So you use other people's money.
There you go. You
Okay.
always that's what the banks do. Everybody does that. OPMs.
Okay.
It's always OPMs.
Okay.
We'll move this down here. Probably just put it in there. Yeah. So liquidity zone trading. So I saw that, okay, these long wicks tell a story. So I drew right here. I seen that, okay, you see that this long line that's right here? This blue line?
The liquidity line?
Yep. I seen that, okay. I seen the M happening. So I was like, okay. So sometimes this is a baby consolidation right here. So it came down, full liquidity again. This is not the move. Most traders get screwed on this move right here because they think this is the move. No, this is a baby move right here. You can make some money right there. Take profit, cool. You made you $1,000 or whatever you make right here. Now he's like, all right, well, you see that it's doing a little M, come down. Now when you see double, I always teach. You see double. Let me see if I can move this. No, I'm trying to move. Come on, move that. No. Hold on. I'm trying to move the let me see. Hold on. Okay, there you go. All right, thank you. So you see the double lines right here, right? This the long wick right here. The double.
Yeah.
Okay. This is the move right here. Now you see these are small ones. See, and all this is, and if you go even further back, you're seeing what's happening. So you see right here, bam, come down, pull liquidity right here, come up, pull liquidity, and every time you see a long wick, there's liquidity grab.
Okay. Oh, is it top and bottom? It doesn't
Top
matter.
and bottom. Every time you see a long wick, there is a liquidity grab. But you also got to look at where you are at the chart, because if you see it was the higher high at one point in time, and then this is the lower low right here.
Yeah.
You know this is the lowest low down here. So you're like, okay, cool. A big move is about to get ready to happen. That's the institutional move right there. So you go right here, you see, bam, long wick, couple long wicks. This is not necessarily a long wick, it's a short wick, but the long wick's right here. Okay, that's a grab. Cool. Right here, come up, still going down. Couldn't pass this support level. So you know it's a grab. Boom. And so all these is making M's.
So the grab is when
doing.
when you put in your money on a grab there on a
No,
lower
the grab the grab is when institutions are seeing pre-orders in the market from retail traders. Like all this is pre-orders that got knocked out.
Okay.
So these are all pre-orders. So every time you see like a support and resistance line and it didn't go past there, it's because all institutional traders, all the institutions did was, and institutional traders, they knocked out the retail traders right here. See? Long wick. See, these are all moves. Okay.
So is
What you're
us
looking,
against them basically?
well, no, I used to think that. No, it's not really us versus the institutions. You actually want to. Have you guys ever heard of the saying, "If you can't beat them, join them"?
Oh,
Yeah.
yes. Oh,
That's
yes.
you want to join them.
Okay.
It goes to what I just said right here.
If you
If you
traded
trade the way
institutions
institutions
trade.
trade, you'll make institutional money.
Okay.
Let me put, if you can't beat them, join them.
I
Oh,
like that.
yeah.
Okay.
Yeah. If you can't beat them,
Join them.
Mhm.
join them.
So do you have to watch this like every minute of the day when you're doing this like this?
No,
Or
no. That's why this is scalping. Okay. Now, if you were
Mhm.
swing trading and all that stuff, is a little bit different. This is scalping. So, what
Okay.
I want you guys to do, I'm just showing you liquidity, what I be doing. Now, what I
Okay.
want you guys to do is there's a few ways, there's a few times you're gonna make some money right here. Like, you're gonna make money right here. That's a nice low. You can make money right here on the downtrend. You can make money right here, like I did. Well, not right here. I made money on this one, on the big one. But you can make money right here. This is an uptrend. These are downtrends. Bullish, bearish.
Bearish.
Up
Yeah.
is bullish, bearish is
Bullish
down.
bear. Yeah.
Okay.
So it's like a
So
roller coaster. You can make money up and down. You get the highs and the lows.
yeah. Now you go. Yes, you can, but I don't want the goal is not to put so many trades in because the more money you put into the market, the higher chance of you losing.
Losing. So
So
you lose all the money that they gave you to play with, and you get
yes,
in trouble.
yeah. Remember, trading is all about trading is a zero sum game. So it's only winners and losers. It's either you won the trade or you lost the trade.
Okay.
Okay. So if anybody tell you anything different, they're lying to you. They're just trying to get some money out of you. But trading is a zero sum game. It's either you win or you lose. I always teach people to go into the market like a predator.
Okay.
So so go go into the market like a predator. Predator. I don't even know if I spelled that right. But anyway, you guys get the gist.
There you go.
Okay. So go into the market like a predator. I want you to go in like a lion. And
Oh,
these
I
are
like that better.
you go in like a lion and you trying to devour the gazelle that's out in the wilderness by him or herself, thinking that they're not in danger. So your job is to go in there, get your $200 to $500 a day, and get out.
So from that liquidity line where the yellow is, on the very bottom one here, okay, you're the one that's the lowest on that yellow bar, So from that yellow to that top with that equity line on the top, you can make money from there like that, like 200 to
From right
500
here,
bucks a
from this
day.
one,
Yeah.
yeah, you could. Yes,
So that's okay.
yes. This is a liquidity grab. Like you could have got in right here, and then it does the M&M, comes down a little bit. You place your stop loss right here,
Yeah. And you could have made
and
some money.
then it's going to continue up because the lower low is right here, and it has to go to the higher high. The higher high is right here. So it's
And
still
how
going. It's
far back
still
is
see this
that?
is lower low, and it's still going. It's going to creep us back. It's going to go back up.
Okay. Wow. How far back is that high?
Well, it goes. I mean, it depends. Like you see, that's the highest high. So this is silver. So
Oh wow.
see, I got it. I got it about. I think it's 5 days back.
5 days back.
Yeah.
So you're going a couple days back, plus you're also going through the Western, the Chinese, and the British kind of markets to get all this information like this to go up and down like this?
No, what I do is I go and hit the higher time frames. I hit the 4 hour, the 1 day, and sometimes the weekly, and
Okay.
I mark my chart that way, and then I
Okay.
come to the 2 minute chart, and I know what's going on in the higher time frame, what's going on ahead. Because institutions also trade price action. Retail traders trade time.
That Okay. What's the
Yeah.
price action?
This is price action. What's going on with price? This is all
Okay.
price.
Okay.
Mm-hmm.
So liquidity line up, down.
And all this is recorded, so you're
Okay.
out. Yeah, so I always post my recordings and all this
Yeah.
stuff. So,
I
but
listened to
yeah,
last week's as well. That was pretty cool.
yeah. See, like I have some indicators on here. You don't need a lot of indicators, but I have indicators. I'll be having my moving averages and things like that. But this one I don't. Now, let me go out of silver and show you some other ones that I want to show. So I have my boy who's with who has his own this is gold right here. I have my boy
Oh
who has his own
yes.
thing called
Oh
Trade
yeah.
Saver. So Trade Saver is one of those. It costs about $350 to get the program, which is not bad at all, and he'll
Hmm.
install it for you. But if you notice, the what I did was I had it to where these are moving averages. So you have the 20 and the 50 move, the 200 and the 20 moving average. Okay, so whenever you see moving averages, you have your lines which one to cross over the other one, and when it crosses over, like how I cross over this way, you're in the buy. You see,
Mhm.
you see
That was
how
right
I
up.
got
Shot right
gold.
up.
All this is gold. That means you're in the what, Dakota?
I'm sorry.
You're in a what? Going up. You're in a what?
You're in the bearish.
No,
There.
going up.
The bullish.
There you go. You're in a
Bullish.
bullish
Sorry.
trend.
All right. Sorry.
No, you're good. You're in a bullish trend. See?
Yeah.
So I want you to imagine right here. Let me see if I can go back.
I guess I got mesmerized with all that gold.
I'm
It's
just
all
seeing the
good.
line go all the way up. I'm like, whoa.
Yeah, bearish.
Now I want you guys to imagine something. See, look. See. Let me see. We'll go back a little bit. Show you.
Mm.
See now, can you imagine? Like now, gold is going up and up and up, right?
Oh my
So
goodness.
So this is perfect example right here. So you see how the 20 and the 200 moving averages are kind of in sync with each other right here.
Flat
How it's
line.
kind of like going like in a straight line.
Ooh.
The blue one is kind of going squiggly, but the orange one is kind of going straight.
Yeah.
Well, what's going on here? This is a consolidation. All right.
Mhm.
So when it's consolidating, you pretty much are just in a zone. All right, so let me show you. You got this right here, and then you got this right here. So there's different ways to trade. Okay, there's different ways to trade. Now, I know this is in a zone. Okay, what I'm looking for, this is a breakout strategy. So there's a few strategies that I use, but I don't want you guys. I've been doing this for a long time, so I know what to look for. When I see something, okay, I'm gonna use the breakout strategy right here. When I see another one, okay, I'm gonna use the liquidity zone strategy. There's different strategies that you can use: supply and demand, breakout, all kinds of different things, right? So breakout strategy. This is actually a really good strategy. Okay, it's a really good strategy because what you're looking for is a breakout. So, like right here, you see it touched right here. The last time it was at a support level, and it was doing this for a while. Doing this for a while. Like me, I'm not trading none of this crap. This is I call this boo boo shit. Like I'm not trading this boo boo shit right here. Like this is shit. This is a whole bunch of retail traders in right here. When you start doing this is everybody just buy, sell, buy, sell, buy. There's no institutions right here. This is all retail traders.
Mm-hmm.
And that's when you start seeing your P&L going up and down and up and down and up and down and up and down and up and down because there's no trend, there's no breakout. This is a little bit of institutions, things like that, both going both. Then right here, it just starts going like here. I'm looking for a breakout because it's going to happen. Because every time, remember I told you liquidity graphs. All that's happening is, bam, pull in, go up here, not breaking this structure, pull in, BOS, break a structure. Nothing's breaking the structure right now. You know, maybe you can make a little something right here, but that's cool. But it's not a breakout structure right here. It's just pulling up and down, up and down. That's all it's doing. Bam. Okay. Now, me, once I see it hit the BOS, which is the breakout structure, right here. Let me show you. Right here. BOS. Break of oh, typing too fast. Break of structure. Once I see this, come on. All right, there we go. Once I see that break of structure, I'm in. I'm putting in a trade right here. This is where I get in right here. And now you ride this bad boy all the way to the wheels come off. You get in right here. And the reason why you get in right here, and you don't have to remember, I always teach, confirmation candle, execution candle. Well, you don't need that right here because you see it broke this structure right here. See, it broke it. This is the structure right here. It broke the resistance level. We got support level, and it broke this resistance level. And you can go either way. You can go support, or it can go it can go support, breaking the support level, or it can break the resistance level. It broke the resistance level because gold is going up. So, see, I got in. I mean, you can get in right here. And then all you do is set your parameters. That's it. You take stop loss, put it right here. So that way, if you do lose, you only lose the one candle. And then you do your take profits however you want to do it. Like me personally, oh shoot. Let me do that. Hold on. There we go. See, me personally, I'm doing like maybe take profit right here, TP, which is take profit. And then I'm doing another one right here. I'm adding to my trade. Now watch this. I'm gonna show you let me show you how much you would have made on this trade. If you no, I'm not. Pay attention, Julius. What are you doing? Text. And then the second take profit. Professional traders always add to their trades. That's why they make so much money. Okay. So remember, this is the stop loss down here. Now, as this is going this way, you can move your stop loss up. So bam, hit the take profit. Now you secure those profits. So now say you're up here. You just move your stop loss. Or you have a program like this one, which has a trailing stop loss. You just click that and it moves up on its own. So now you done made this money right here. Now you're on the second wave of money that you're making. Now watch this. Where we at? Oh, here. So let's say you got in right here, where the breaking structure is right here, and bam, hit the second take profit right there. And this is gold. Remember, gold is a lot of money.
Oh, yes.
So watch this. This is how much you would have made on one trade. And this is why a lot of people are making a lot of money. Manny.
Yeah.
Watch this. Let's go to currency. That's how much you would have made on one trade.
Damn.
$8,000 one trade. You see why trading is the #1 money maker in the world? You're printing money.
How much I hear about different programs that are for sale, like you said, one's for 300. Like, what's the total like investment you need just to have the computer and these type of programs to help you with all the stop loss and stuff like that? I keep hearing.
Well, NinjaTrader doesn't charge you for anything. Like if you want to have NinjaTrader, this is NinjaTrader right here. You
Yeah.
want them, they don't charge you. All you have to have is a HP or some
Okay.
a good brand that you can download um the charts and the brokerage account. Um,
Okay.
they don't charge you to open up a brokerage account or anything. That's if you want to start with real money. But the investment comes when you have to do the prop firm, like you're doing right now. As you can see, the prop firms are not that expensive. You know,
Yeah. Yeah.
um,
Okay.
but the prop firms are to be leveraged in order to get you to the real money, so that way you can trade your real money while simultaneously making money trading prop firms too.
Okay.
Does that make sense?
Yeah. Yeah. More different ways of making money that you can invest in, or just take your time out and learn.
There you go.
That's the investment.
There you go. You guys have any questions?
Um,
This is a simple trade. This is a breakout strategy trade. That's it.
yeah. Uh-huh.
Breakout strategy trade. Let me see if I can retype it.
So can you make money on the way down as well? Like
Yeah, both ways.
from the bullish to the bearish?
Yeah,
How
yeah.
do you do that?
You can make
Okay.
money on a bearish trade too. Yeah,
Hmm.
yeah.
Mhm.
Look, so I mean, let me see. Right here, it's a bearish trade.
Where to? Let
Right.
me just a minute. Where you to?
See, that's
Uh-huh.
a bearish trade.
Oh yeah.
But
Bam.
look what it did. See, look.
Mhm.
Remember, bam, pull liquidity came down, pull more liquidity, went up. And then that's when it consolidated, pulling all this is liquidity grabs. And then bam, that's the big move right there.
Mhm.
So institutions came in, they put it down to the low there, and then it came back, let everybody think about it, and they can change it.
Whenever you see long elephant bars like this, as Oliver Velez would put it, these are called he calls these elephant bars. These are candlestick, but whatever you want to call it. But I might change it to fit my program, 5-star bars. Like when you see the five star engulfing bars right here,
Mhm.
that's both institution. This is all money in these candles.
Going up,
Wow.
right?
So that's how you can look at
Up
it
or
as money.
down. Yeah, up
Up
or
or
down. Like
down.
these got money
Uh-huh.
in it too. Every single candlestick and all this other stuff got money. But
Okay.
the money is the institutions. These are institutions plus people putting in buys. You see?
Okay. Yeah.
So if you get in right here, you gathering all these people who putting in, you might have institution putting in $1,000. You have another one putting in 500. You might have another retail trader putting in $100. You have another one putting in $50. You have and it just keeps going up. And next thing you know, this is how much you gathered after you take your profit. See how that
Hmm.
works?
Yeah. Hmm.
Every single bank, every single institution, financial institution, they all trade or have traders. Everybody does.
Mhm.
The bank is trading your money as we speak. That's it. I don't care if you're offshore. I don't care if you're in the state. I don't care. If you got money in an institution, they are trading your funds, especially if
Whether
you
it's
got some good money
private,
in it.
especially if it's a private or public, correct?
Mm-hmm.
Okay. Thank you. Okay.
See
Okay.
how that works?
Mm-hmm. Great structure.
And this is gold. So
Yeah.
I showed you guys silver and gold.
Yeah.
So let me go back to silver so you can see. See? So silver is going up too. It's reaching new
Yes,
heights
it
as
is.
well. But
Yeah.
um and I think one contract, let me see. I'm just gonna put in a trade just to see. Then we're gonna get off here in a second because I think Wilson is about to have his stuff. So let me see. So before I put in a trade, let me see if I can. So okay, this might be a liquidity grab right here. You see the long wick?
Uh-huh.
Now watch, it went down here first. So this is it's doing that M&M thing right here. See? Right here. So this might be a liquidity grab. Let's see if it does the same thing. See,
So
it'll
so
come down.
institutions might buy there and then it'll shoot up again with the long candles. More
Yep,
people putting
because
money in it.
right now we're in Asian session. So this is Asian market right here that's trading.
Asian. Asian. Uh-huh.
Yep. So what happens is, you see, Now this is the support. I mean, sorry, the resistance level. So it's come down. Let's see if it's going to pull. Let's see.
Okay.
I'll do a simulation trade right here, just so you can see. See how far it goes down. Now, Asian session is a little bit more slower. New York is a lot more volatility in New York because it's way more people in America than in Asia. So you got more investors and institutions in the US. So you'll see the volatility will be a lot faster. But it's okay to trade Asian session. See, you see that long wick that's happening? Let's see what happens. So remember, it pulled liquidity these 3 times. So I'm expecting for it to go bullish. So let's see. So this is my confirmation candle. If it goes bullish and it goes past this, then the next candle I'm in. This is where you use this is where you use that strategy where you see, okay, once this candle gets overlaps this one, and then the next one start going that way.
Forms the M.
Yeah, the M was already kind of formed. So it came here, down here, like
Okay,
this.
that's M.
It's like a little loop. It's not like, sometimes it's not a perfect M, but it's like
Okay.
yeah. It's like squigglies, like this, like a mountain.
Okay.
Then I'll do a live trade with you. It'll be a simulation trade. I'm not trading my account or anything, but I'll add on to my trade too, so you kind of see. See, let's see. See, this is a liquidity grab right here. So if it goes past this, yep, I'm getting into that trade. So I got two what's the names in. So what I'm expecting is, see, this is I already have my stuff set up pre. So let's see what happens. So I don't worry about this. I got 2 contracts, so that's why it's going down so fast. But this is a simulation. So normally I would have 1 contract and then add on to that. But I'll do the add on and all that stuff so you can see. Let me see, what was the lower low? Okay, it's about the same. See, I'm looking about the same. So I'm looking for the same type of move, because look what happened back when I made the money earlier. Let me see, where is it at? Vertical. See, about the same. You see it right here, and look where it stopped again right here. About the same.
You're looking to your left, correct? You're looking to your left.
Let me bring it up so you guys can see. Yeah.
Thank you.
So,
Thank you.
Okay, so you see right here where I made the money right here. Look what it just did right here. See, same area is stopping in. See, that's an indication for me. And look what is happening.
It's going up.
See, if you all you see, knock me out. It gave me $700 just now or whatever. So let's see.
So basically, these trades, you can do what you need to do in a couple of minutes.
Yeah. Okay. Trading is like kind of like, well, you do real estate, Manny, or you've done real estate.
Yeah.
Trading is like real estate. It's all about your location when you come into the trade.
Okay.
See, you see how right here it was a liquidity grab right here.
Yeah.
Same thing right here. So I'm expecting it to come and knock out now. Let me kind of, so you guys can see the trade a little bit better. See, so this long wick right here came a liquidity grab, and I'm expecting it to go this way.
Yep, to the blue line.
Now, I mean, I can bring the line down. I can do whatever, but
And that validates how much you're gonna get paid, like how much you sell or make.
So now it's on one contract. This is silver, so it's pretty much let me see. Every tick is I think it's $100. Yeah,
Mm-hmm.
$100 per tick. The silver is going up.
Yes.
What I'm
and it-
expecting for it to do is come hit this line, but I can also add on to my trade. So as the trade is going my way, I can add a contract on, and when I add a contract, it gives me more money. But if it goes against you, it can you can lose more money too.
Mhm.
So you see, remember right here. Let me write this down. Let me show you guys. So this right here, confirmation candle. So now it's trying to go against me a little bit. It's okay. It's just titty dancing. I'm not worried about that. So the first one was my confirmation candle, and then the second one is my execution candle, which was this candle right here. So the first one is the confirmation candle. This is, they have what is called fake outs too. This could be a fake out, just to get people out the market. Confirmation candle. That's the first one. And then the second one is execution candle.
Mhm.
This is why you got to be patient with your trades.
Mhm.
A patient trader is a profitable trader.
Mhm.
I heard there's a lot of emotion in this stuff as well.
And if it goes against me, then hey, the market won that day. That's
Yeah.
all. I already made money, so I'm not worried about that. But I'm just saying, like, so this second candle is my execution candle. So now it's doing the little titty thing right here.
Dance.
But it's cool. This is liquidity grab right here. So let's see what's going on. So I'm expecting it to go up. So I will put my stop loss right here underneath this long wick right here. So that way if it comes down, it's just going to, I'm only going to lose maybe
What you put in.
So let's see what happens. See, it's going up.
Mhm.
See? Let's see, watch. I'm gonna add on to my trade. I'm gonna add a contract, see? So I'm expecting that to knock me out. It's gonna knock that one out, and then it'll go to the second one. See? Take this one off. There you go. So now I move this one up. You guys seeing the Asian right now. So now I'm moving this one right here. So now I'm guaranteed I already made some money again because it knocked me out my first take profit. So now it's either going to go and take my take profit, my second one, or it's going to come back and knock me out. But now see, I'm up 1,500. 2 contracts. Bam.
As we speak.
See?
Mhm.
$5,000 right there. One trade.
As we spoke just now, that's crazy.
See?
Wow.
You see how easy trading can be? If you just understand location, and that's silver.
Mhm. And being patient with it. Yeah.
See? 5,000 right there.
Mhm.
I think I will end it on that note. See? There you go.
So in basically 20 minutes, and while you're talking to us, you just profited, you know.
No, that was a sim account. That wasn't on my
Yeah.
real account.
Yeah,
But
yeah, I understand, but basically you're just still doing it no matter, like, that was amazing.
And you see how I knew it was going to happen because it repeated itself. Remember, I showed you guys. You see how I pulled liquidity the first time and then it went up? The same location, it came back down to the same location, did the same liquidity grab. And it's like, okay, well, it's doing the same move and history repeats itself. Why not? Why won't it go the same way? Unless news breaks out or something, I'm going to be 70 to 80% correct because trading is you trade on probability on probabilities.